Hello, and thank you for joining us for our Trade Outlook, response to geopolitical events brought to you by S&P Global Market Intelligence. Our senior economist will cover trends in trade shaped by current geopolitical changes and anticipated shifts in trade following international policies and agreements. We will take a closer look at historical quarterly perspectives and to evaluate the factors that are shaping trade currently, like conflicts, trade sanctions, and energetic policy. My name is Patrick Lucas, Maritime Trade Supply Chain Marketing Director at S&P Global Market Intelligence, and your moderator for today. I'm delighted to introduce guest speaker Jakub Kwiatkowski, Senior Economist for Global Trade Forecasting within S&P Global Market Intelligence. I would now like to hand over to your speaker, Jakub.
Thanks, Patrick. Hello, everyone. I'll start by showing some most recent historical data on global trade in the last few quarters. Next, I'll be describing the recent geopolitical factors and macroeconomic environment that's impacting global trade now and is most likely to impact in the forthcoming months. Then I'll present the results of our just released forecast. Let's start with some recent historical data. If we consider the top 10 economies in the world, which are responsible for approximately 80% of global GDP and 75% of global exports, we can see that the growth rates related to the post-2020 recovery peaked in Q2 2021 and then moderated to the lower levels in Q3 and further in Q4 2021. The slowdown is sustained in the first half of 2022 and, taking into account macroeconomic projections, is expected to continue in the following quarters, with potential contraction later this year in some economies, especially advanced ones. From a quarterly perspective, the most recent data for the second quarter of 2022 from Global Trade Analytics Suite points to a positive year-on-year growth for exports as well as for imports in all top 10 reporting states, apart from Japan, which marked 2.3% drop in export value in the second quarter of 2022. It doesn't mean, however, that we do not see the slowdown right now in trade in the second quarter of 2022 for most reporting countries. Actually, apart from imports from India, which had an impressive second quarter, it's the growth of about 50%, and Brazil growth in imports of about 35%, as well as Canada with growing dynamics of exports as well as imports of 28 and 22% respectively. Russia is not reporting data starting from February 2022 onwards, yet obvious tremendous drop in Russian trade is inevitable as a consequence of the aggression in Ukraine. Going deeper into monthly data, exports in top 10 economies were increasing as in January and February 2022, but the situation started changing in March 2022 when export growth dynamics slowed down in nearly all economies, while UK noted a significant exports value. The latest data for June 2022 point to positive growth in almost all states apart from the EU, Japan, which noted 6.1 and 2% decrease respectively in the value of exports. Imports, in turn, followed a similar trend as exports in 2021, and the beginning of 2022 followed by a slowing dynamics of growth in March 2022 in half of the top 10 economies. The most significant slowdown in March 2022 was noted for mainland China, with year-on-year growth in the value of imports reaching only 0.6%. The most recent data for China mainland show a positive trend in year-on-year growth for exports and imports, making 18% increase for both in June and July, and limited positive growth in imports of 1.5 and 2.5% in June and July 2022. Coming back to the most recent results in the value of imports, the highest growth in June 2022 was noted by India, with imports increasing by impressive 58%. Indian economy was followed by Brazil, making 34% growth, and EU with a 23% increase. Three economies had already published the data for July 2022. This is Brazil, mainland China, and South Korea, with the highest growth for exports reported by mainland China and Brazil as well. In terms of imports, Brazil also marks a very high increase in July 2022 of 35%, followed by South Korea with 22% growth year on year. The global trade recovery in the top 10 economies was present in nearly all sectors in 2021. In 2022, the number of industries with negative growth rates increased from 8 out of 96 HS two-digit level sectors in the fourth quarter of 2021 to 16 in the first quarter of 2022 and 24 industries in the second quarter of 2022. The sectors with the highest year-on-year growth in the second quarter of 2022 were silk, tobacco, and base metals. On the other hand, the largest drop in second quarter of 2022 was marked by foreskins, which noted a significant decrease for a third quarter in a row, followed by ores, slag, and ash. In total, compared with the first quarter of 2022, year-on-year growth rates in the second quarter decreased in 68 commodity groups and increased in 28 commodity groups, which clearly shows the slowdown in the global economy. Let's move to the most important factors shaping our projections lately. It's quite obvious that over the last quarters, macroeconomic and geopolitical environment is particularly dynamic, which we have to take into account in our projections. The most important factors that we find relevant for trade to a large extent are the war in Ukraine, tensions in Taiwan Strait, COVID-19 pandemic, and the inflationary pressure that is present in recent months. Let's start with COVID-19 pandemics. From the first quarter of 2020, COVID-19 is a clear game changer, also in terms of international trade, resulting in the largest trade drop since the global financial crisis of 2007-2009. Significant increase in COVID-19 new cases in July, approaching 1.5 million new cases daily in the world. In August, the pandemic situation started stabilizing, with daily new cases dropping below 1 million worldwide. Usually stressing and discussing the impact of the pandemics on trade is that the impact itself constantly changes. Every next wave of pandemics so far has a lesser direct impact on trade. But on the other hand, it's indirectly significantly affecting global supply chains and causing global supply chain disruptions. They tend to differ regionally, as different regions are often hit at different times. The example we often refer to can be the Omicron variant from the beginning of this year, which did not impact to a large extent European economies, but definitely impact significantly East Asian economies. Such variation make it way more difficult to predict the end of global supply chain disruptions, but we constantly expect them to settle down in 2023. On the other hand, the pandemic situation in China needs to be still monitored, as the restrictions to the new wave of infections sustaining their zero COVID policy. This reminds the situation from the first half of 2020, when strict lockdowns resulted in temporal strong economic activity reduction. At this point, however, complete lockdowns are not introduced, and it should be noted that the pandemic situation is still extremely hard to predict. The most significant impact of war on world trade is felt at the sectoral level through commodity prices, especially commodity prices related to sectors where Russia or Ukraine are or were major exporters, primarily agricultural goods, energy resources, or fertilizers. Overall, we anticipate in our forecast that the war will decrease global trade by 1 percentage point in 2022. Recently, the situation in Ukraine did not change significantly over the last month, obviously from the economic perspective, as the Ukrainian counteroffensive is ongoing. In August, Ukraine started to export grains again, primarily to North Africa, Middle East, and Asian countries, which to some extent reduces the threat of a large-scale food crisis. But at the same time, we estimate that the Ukrainian economy is about to export around half of its previous capacity in 2022. From the Russian perspective, trade shifts from developed countries that imposed sanctions to other destinations are already visible in the global trade analytics suite data. The main destinations so far are primarily mainland China and India, also a few other countries in the region. Another thing that we are recently quite often inquired by our clients is the impact of tensions in Taiwan Strait. First of all, it should be noted that the recent situation is tense and dangerous from the geopolitical perspective, but at this point it's not affecting global trade significantly, which is still our baseline scenario. But obviously it needs to be carefully monitored, as any form of escalation may drastically change our predictions, at least for some industries. Because in line in our global trade analytics data, almost 75% of Taiwan's exports is related to electronics and computers. From the global perspective, Taiwan is the second largest, after mainland China, exporter of electronic valves, tubes, semiconductors, and electronic components in the world. Clearly, in the case of escalation of conflict, export disruptions may significantly worsen the global semiconductor shortage, spilling over to different industries such as computer or automotive sector. Over the last month, the main macroeconomic drivers impacting global trade are hiking inflation in the world, which is closely related to the second one, which is global economic slowdown. Both are clearly induced by several geopolitical events. The inflation is still fueled primarily by the energy and food sectors. For another month in a row, the forecasts of inflation by the Economic and Country Risk team show an upward revision of inflation for the next few quarters. According to the newest data as of August, inflation in the world will reach its peak in Q3 at 8.2% level compared to 7.6% in the second quarter and 6% in the first quarter of 2022. The decay of inflation is expected to start in the second quarter of 2023 and return to the long-term trend from the last quarter of 2023. At the same time, the inflation in emerging markets exceeded advanced economies in the second quarter of 2022 after a switch of that lasted more or less 2 quarters. Due to the lag in inflation dynamics of emerging economies, the peak of inflation is expected a quarter later. Compared to previous month forecasts as of July 2022, the inflation in the world is revised to be significantly higher. It's pretty obvious that not all the factors that can impact global trade directly or indirectly in the forthcoming months, just to mention some others, maybe are not considered as a game changers, but still are important regionally, need to be monitored, are surely recent political changes in many countries, such as the UK, but also Sri Lanka, for example. Also, the future of energetic policy in the EU remains unclear so far and will certainly impact internal and external trade of the EU. Also, Croatia is joining the Eurozone in 2023. Finally, there's a quite huge exchange rate volatility, especially in emerging economies, which raises overall trade uncertainty. Also, Euro is the weakest in years, approaching the parity with US dollar. All of these factors can impact trade directly or indirectly. In terms of global manufacturing, for the 5th month in a row, it did not exceed the benchmark of 50 points in July and equal 48 points, highlighting the global economy's slowdown. The readout for July was lower than in June. It was 49.5 points in June and slightly higher than in May, sustaining the lowest consecutive values since the first wave of COVID-19 pandemics from February to July 2020. What's more, the results for global services fell below 50 points for the second time after 7 months of consecutive above 50 readouts, undermining the resilience of services, which were so far considered as the main engine of growth despite the worsening of macro environment, to the conditions of the global economy. The readout for July equaled 48.2% following 48.5% in June. At the country level, similarly to June's readout, the values of PMI new export orders exceeded the benchmark of 50 points only in 2 economies among this top 10 group. This was India, 52.6, and mainland China, 50.7. On the other hand, both results were slightly lower than in previous months. None of the remaining top 10 economies exceeded the global average of 48 points. In absolute term, the largest month-to-month increase was observed in Russia, which seemed to be gradually recovering from the war-related trade shock. The trade shock which was reflected in the PMI drop of record high 16.4 points month-to-month in March, and the lowest absolute value of PMI in the analyst group over the period February-June 2022. In July, Russia's PMI exceeded the European Union's by 1.2 points. It should be mentioned here that the value for the EU was 43.8 and is the lowest value for the EU since June 2020. Now, how GDP projections look like? After the contraction in the second quarter of 2022, the global economy as a whole is growing again, led by emerging markets, obviously. World real GDP is projected to slow from almost 6% in 2021 to 2.7% in 2022 and 2.3% in 2023. But then in 2024, it is expected to revive to long-term stable path growth at 3%. At the same time, advanced economies in Europe are likely to be hit by recession in late 2022 and early 2023. Also, the US economy is slowing and is not expected to get back on track until 2024. A slightly faster recovery is expected in mainland China, which the economy should accelerate already in 2023 after slowing to 3.8% growth in 2022. Another factor that we take into account in our forecasts are gas and oil prices, which we utilize as a proxy for inflation costs. Just over the last year, the price of oil increased up to 70%, contributing to high inflation worldwide, which together with exchange rate volatility raises overall trade uncertainty in the world. On the oil prices, since the peak in the first half of March, the price initially decreased in April, but then gradually increased to exceed the level of $120 per barrel at the end of May, dropped below $100 in the mid-July, and the value is still oscillating around the level of $100 per barrel till mid-September. Similarly to the price of oil, the price of natural gas increased significantly over the last year, reaching a maximum value of $9.9 at the end of August, which sums up to year-to-year increase of 250%, showing even higher volatility than oil actually. Both indicate significant increases in trade costs worldwide. Now, as we discuss the most important factors impacting global trade, let's move to our recent trade projections. So after a strong recovery in 2021 and 2022, a contraction of 0.9% in terms of value and 0.5% in terms of volume is expected. It's a slight downward revision of our forecasts. Our previous projections have shown a negative growth of 0.3 and 0.2% respectively. In 2023, trade recovery is expected at 0.5% in terms of value and 2.2% for volume. This is also a slight revision. Previously, we expected the growth of 2.8% and 2.1% respectively. In absolute terms, in 2022, international trade value and volume are expected to equal $21.2 trillion and 14.9 billion metric tons, and in 2023, $21.3 trillion and 15.2 billion metric tons. If we transform this data into growth rates, the pictures show some historical similarities to the previous crisis in 2009. Compared to that time, trade contraction was less significant in 2020. However, the increase in 2021 was about the same as in 2010. And finally, similar to the post-crisis period, in the long run, a return to a stable path growth is expected, which is more or less 2.5% yearly. As you may know, Global Trade Analytics Suite Forecasting estimates its predictions for different transport modes. I believe that the majority of our clients are usually interested in the seaborne trade, so let's start with trade value. In line with our forecast, the value of seaborne trade is expected to decrease to $10.6 trillion in 2022 and recover to $10.7 trillion in 2023. Our team anticipates a year-on-year contraction in the value of seaborne trade by 1.8% in 2022 and a recovery of 1.2% in 2023. A bit higher volatility is visible from the perspective of trade volume. The seaborne trade volume is expected to decline to 10.9 billion metric tons in 2022 and grow to 2 billion metric tons in 2023, which translates to a slowdown in 2022 and recovery in 2023 with growth rates of minus 1.5% in 2022 and 3.6% in 2023. Another transport mode that estimates are making our forecasts quite unique in the market are the projections for global airborne trade. Once again, let's start with trade value. Our model predicts the value of airborne trade to go down to $3.8 trillion in 2022 and then go up $3.9 million in 2023. This translates to a year-on-year change in the value of airborne trade by minus 1.5% in 2022 and 0.4% in 2023. Quite similar picture is presented for the trade volume. The seaborne trade is expected to amount 35.2 million metric ton in 2022 and 35.4 million metric ton in 2023. In absolute terms, it points to a slowdown of minus 2.6% in 2022 and 0.6% growth in 2023. The intensity of global slowdown clearly differs regionally, so we can see it also in our forecasts so far. The forecasts are showing some regional variation. Largest exporting regions and their trade between 2018 and 2024. Clearly, the largest exporting region in 2021 were the EU, Eastern Asia, and North America, which is not that surprising, followed by Southeastern Asia and Western Asia. COVID-19 pandemics impacted the most Western Asia, which exports contracted by 21% in 2020, but was followed by the strongest increase among these regions in 2021 by 34%. The other end of the spectrum is Eastern Asia, which exports dropped by 1% only, followed by a percent increase in 2021. In 2022, regional growth rates will range from minus 1% to 2%, with drop in Southeastern Asia and trade expansion for North America and East Asia, both 2%. For the EU and Western Asia, the growth is expected to be slightly above zero. In 2023, all listed regions are expected to grow from 1% for Western Asia to 4% in Southeastern Asia, apart from Europe with 2% drop in exports. Similar patterns are visible in the data for 5 largest importing regions. Here, the largest importing regions were, again, the EU, Eastern Asia, and North America, followed by Southeastern Asia and the rest of Europe, which is non-EU Europe. Among these regions, trade contraction was quite similar, ranging from 4% in Eastern Asia to 8% in Southeastern Asia and North America. The strongest recovery in 2021 was visible in the data for Eastern Asia, 26%, and the EU, 25%. In 2022, regional growth rates for imports will range from -2% for the EU, Eastern Asia, and to 1% for Southeastern Asia and 6% for North America. In 2023, the contraction will continue in Europe, which is -2%, and -4% for the rest of Europe, while Eastern Asia, Southeastern Asia, and North America will grow by 1%, 2%, and 4% respectively. If we look from a longer perspective, the recent slowdown is not expected to impact negatively the dynamics of trade growth in the long term. The post-2020 recovery was strong enough to allow global trade to reach its pre-pandemic levels already in 2021, and the presently predicted growth over the period 2021-2035 is sufficient for the global trade to achieve a higher trajectory than the pre-pandemic historical trend, even taking into account the negative revisions from our previous forecasts related to the recent macroeconomic situation. All in all, in 2035, the value of global trade should exceed the value from 2022 by 37% more or less. And that's it. Back to you, Patrick.
Thank you very much, Kuba, for that insightful presentation. But just to start off here, Kuba, a question on why do predictions differ so much regionally?
They can differ because also the global slowdown that is visible in our macroeconomic data differs regionally. What we can see now is that the majority of Asia, especially Eastern Asia, is not expected to have recession in 2023. What we can see for Europe is that the recession is expected there and is expected to be even a bit longer, that it should go also to 2024. And we can see it already in our trade data. The EU is performing in terms of trade a bit worse than the rest of the world. So it will definitely differ in terms of the economics, but also will differ depending on geopolitical events. We can see quite different responses of governments for COVID-19 pandemics. We know from March this year that mainland China's government is introducing lockdowns, which is limiting to a large extent economic activity, which is not the case in Europe, for example, or North America. So the second main reason why the results will and have to differ regionally.
Fantastic. Thank you very much for clarifying. Another question that we've got, why is the new trajectory expected to be higher than previously stated?
Basically, the main reason is that our projections for both trade and also macroeconomic environmental were a month or 2 months ago. We actually expected a bit heavier recession and coming a bit faster. What we can see still in the macroeconomic data is that major world economies are doing actually not that bad as we expected. And if the economies are not doing that bad, then the trade will not do too bad as well. And that's the main reason, I think.
Okay. Thank you very much. And can you advise how the inflationary rise can be for commodities such as food?
The majority of inflation in the agriculture and food industries was related to war in Ukraine. And what we can see now is that Ukraine in August started again exporting grains. It should limit to some extent the inflationary pressure in food. But whether it will happen, it has some behavioral aspects as well. For now, we don't have enough data to answer this question, but it's actually a really good one.
Okay. Thank you very much. Another question, are there any other attributing factors that we need to take into consideration that could have a bearing on the next few quarters out?
There's always a lot of factors that can at least indirectly impact global trade. Political events like changes in Sri Lanka, changes in the UK. We should carefully monitor whether trade policy of the UK can change. Also, global value chain disruptions is something that should be monitored. At this moment, we can see still some global value chain disruptions. They tend to differ. They differ regionally. They tend to occur at different times in different parts of the world. So it's extremely hard to predict. So far, we still expect global value chain or global supply chain disruptions to settle down in 2023, but it will depend for sure on the pandemic situation, which is completely unpredictable.
Thank you. Very insightful. Here's another question. What is behind the very strong recovery that we saw in 2021? Can you shed any light on that, please?
The strongest part of this recovery in 2021 is simply the base effect. If trade is contracting as it contracted due to the COVID-19 pandemics, then just going back to trend, going back to normal is already strong growth is visible. On the other hand, we had quite strong macroeconomic foundations. So the global economy is doing good, then trade has to do good as well. These were, in my opinion, the most important factors.
Fantastic. Thank you very much. One more question in here before we wrap up. And if we are still experiencing worldwide supply chain disruptions, will this affect the overall trade outlook? If you could shed some light on that, finally, that would be great. Thank you, Kuba.
So similar to the case of Ukraine, here the global value chain disruption can impact several industries, but they are not that likely to impact global trade as a whole very significantly. It can be a struggle for industries. Like I said, in the case of tensions in Taiwan Strait, if there will be problem with semiconductors, it can spill over to different industries. But it's not that obvious that if it will happen in other industries, that then it will impact trade outlook. We don't expect an increase in global supply chains disruptions. Actually, what we can see so far is the situation with global supply chains is easing. However, it can make a few more months for the situation to settle down, to go back to normal.
Okay, that's great. Thank you very much for joining us. And thank you again to our speaker, Kuba Kwiatkowski.